Hello and welcome to the live economic and financial market commentary. This live session will cover fundamental analysis in the week ahead, global coverage of current economic data including major markets news, analysis and events, how to apply the best trading strategies prior to news being released and after. First, I'd like to start the session by giving you some information about me. My name is Ihab Jubil. I was born and raised in Egypt. I have a passion for financial trading as well as teaching. I have been trading for a number of years, mainly on Forex and commodities, and in recent years, I have also set up my own trading robot signals and website. I host online webinars and seminars on investment and financial trading regularly, and I provide my service to subscribers worldwide. Now let's start the session. Traders will be keeping a close eye this week on an commentary or actions from People's Bank of China and an even closer eye on the yuan fixing. The dollar strengthened as China shifted to a more market-oriented exchange rate, driving stocks lower and oil led gauge of commodities to a 13-year low, while European equities rebounded from a weekly loss. China's stock devaluation of its currency last week focused investors' minds on weakness in other emerging markets, notably Malaysia and Turkey, which both are facing political crisis. FOMC minutes will not contain any reference to the yuan devaluation, which could result in the minutes being a non-event. Weaker yuan may prompt Federal to delay their rate hike, which economists still favor in September. But without knowing that Federal are thinking of last week's events, and traders will have to rely on comments from members this week. A relatively quiet calendar for Australia this week, but Tuesday presents the monetary policy minutes of particular interest will be any commentary on the exchange rate. As reference to it within the last statement were removed, which suggested RBA are happy with the current levels. Remembering the market turmoil last week due to the People's Bank of China devaluing the yuan, there will not be any reference within the minutes as they occurred prior to last week. So we will need to wait for comments from RBA members or next month's cash rate decision and statement to see the RBA's view on this crucial factor for future monetary policy decisioning from the RBA. Tuesday could finally see the pound or pound dollar break out the deadlock with inflation data. Out of the past 5 releases, it has between minus 0.1 and 0.1. As we will see soon. Most recently, stabilizing at zero. The question here is whether we have seen the end of the deflation spell that Kearney previously warned of, or whether UK will finally be dragged back into negative territory. With recent disappointment from a dovish Bank of England, I suspect there is plenty of sterling longs to be unwound in the event of any weak data, with inflation data being one of the more notable ones this week. In Canada, with manufacturing missing the mark on Friday, attention will now shift to CPI data. And similar to the UK, leaves traders wondering if it will dip back below zero, with both Brent and WTI at fresh multi-year lows. Another deflationary spiral and potential rate cuts almost seems inevitable for Canada, which should see traders continue to short Canadian dollar crosses in the week or weeks ahead. About Euro, any flash PMI of services and manufacturing from France, Germany, and Eurozone are this week's calendar highlights. German Parliament votes on new 86 billion euros rescue plan for Greece, which has already sparked the largest revolt from its party. The bailout was approved by European finance ministers on Friday night and prompted Angela Merkel to support the deal. The Bloomberg Commodity Index fell for a fifth straight day, slipping 0.2% toward its lowest level since 2002. Copper, aluminum, and tin retreated at least 0.4% in London, while gold for immediate delivery was little changed at 1,110 at ounce. West Texas intermediate crude oil weakened to $41.9 a barrel, while Brent in London lost 1.2% to $48.6 a barrel. The number of rigs seeking oil rose by 2 to reach 672 for the sixth gain in 7 weeks. Norway's krone slipped 0.4% versus the dollar. The Organization of Petroleum Exporting Countries may boost output to a record after Iran international sanctions are removed, according to the nation's OPEC representative. This week we will watch these events in London time. Tuesday, 9:30 a.m. UK CPI yearly release. Wednesday, 1:30 p.m. US core CPI monthly release. Thursday, 9:30 a.m. UK retail sales, and at 3 p.m. US existing home sales. Friday, 1:30 p.m. Canada core CPI, and the same time Canada core retail sales. I will talk in more details about some of this news. UK CPI yearly release will be released on August 18 at 9:30 a.m. London time. UK CPI release could provide some directional guidance for the sterling, as recent China devaluation has caused uncertainty in its trading pattern. If we get a stronger release, the pound should gain as traders expect a rate hike by Bank of England soon. The forecast is UK CPI forecast to be at 0%, previously was 0%. And we can see the historical data. Last change happened in May. So what will be our trade plan? We are looking for a variable deviation of 0.3%. If the inflation number remained above 0.3%, we will buy pound. If the inflation number decreases to minus 0.3% or less, we will look to sell the pound. So we'll buy the pound 0.3% and sell at minus 0.3% or worse. Even with a slight difference of 0.1%, the market usually overreacts. If our deviation is hit, there is a strong possibility that the market will move more than 50 pips. We will be looking for an after news retracement trade, and you will do the 3 waits. Wait for the deviation first. Wait for the market to move with the momentum first. And wait for a decent retracement before entering the market and buying the option or placing our trade. And this is 1 minute chart for last release during and after the news release. It was expected as 0% and it did not change the actual number. Because we did not get the deviation number, the market followed the pre-news, pre-release market condition and sentiment. It kept going up, as we can see. At the end of this webinar, I will show you the trends for the major currency pairs, so it can help us if we don't get our deviation numbers. US core CPI will be released on August 19 at 1:30 p.m. London time. US core CPI is expected to rise to around 0.2%, and with the federal inching towards the next expected hike schedule, any surprises should cause plenty of market price action. US core CPI forecast 0.2%, previously it was 0.1%. The plan to trade this release is our minimum tradable deviation for this release is 0.2%. If the release number decreases to a minimum of 0%, then we will sell the dollar. If the core release is 0.4%, we will buy the dollar. And even at a difference of 0.1%, market is likely to exaggerate its move. Once again, we are going to focus on the core figure or CPI except food and energy, not the headline CPI. So we look for core CPI. We will trade this news release using the after news retracement strategy. And we can see 1 minute chart for the last month during and after the news release. Because we did not get the deviation number, expected as 0.2, and Actual release was 0.2, the same, did not change as expected. The market followed the pre-release market conditions and sentiment, and it kept moving down. And it could be a good opportunity to make a trade. UK retail sales will be released on August 20 at 9:30 a.m. London time. UK retail sales is expected to come in at 0.2%, and we will be looking for a minimum deviation of about 0.5%. We would place a trade only if we get our tradable deviation. What analysts expect? They expect UK retail sales at 0.2%, previously minus 0.2%. So then how to trade this news? The monthly retail sales report is a direct measurement of consumer activity at the retail level. A higher release is generally good for the economy and better for each currency. A lower release is considered negative for the economy and not good for each currency. So our tradable deviation or surprise factor for UK retail sales is 0.7% to buy and minus 0.3% to sell. We will buy the pound if it hit 0.7%, and we will sell at minus 0.3 or worse. And of course, considering that we are expecting a 0.2% figure, I would recommend to buy only if the figure is at least 0.7% or better. We will trade this news also using our after news trading method. Canadian core CPI will be also released on August 21 at 1:30 p.m. London time. In Canada, core CPI is likely a strong high impact event, but since it's released at the same time with Canadian retail sales, I would recommend paying close attention also to both releases and only trade if there are no conflicts between the two numbers or two releases. Remember that Canadian core CPI forecast to be 0%, previously also 0%. How to trade this news? Our deviation for this release will be around 0.3%, therefore look for tradable figure of minus 0.3% or worse to sell the Canadian dollar, or 0.3% or better to buy Canadian dollar. We will buy at 0.3 and sell at minus 0.3 or less. You will be looking for an after news retracement trade for this release, and we can see 1 minute chart for July release for yes, during and after the news release. And because the deviation number was not hit, we did not see any new direction of the market, and the market just followed the pre-release market condition and sentiment upward. So with any news release, if it hits the deviation number in any direction, we will follow the direction. If it will not, so we will just follow the trend or the market condition and sentiment. Here you can see the trend that you should follow if the deviation number would not hit after any news release for the major currency pairs. And this trend or this direction based on many popular indicators at daily chart. So at daily chart, the trend for euro dollar is a strong buy up. Pound dollar the same. Dollar yen also strong buy or uptrend. Like dollar Canadian dollar, euro yen, and euro Swiss franc. Australian dollar is down trend, strong sell. We will use this trend only if our deviation number will not hit. I want to remind you, if you missed the webinar or want to watch it again, you can watch it at Bioneer.com YouTube channel. So then I would like to thank you for attending today's webinar. We will hold the following webinar next Monday. Goodbye and see you next time.